All right. Good morning. We're back in operation here. Power. Good morning. Yes, I'm here. All right. So this M top, which started yesterday on the 5-minute chart, is now developed into N moving lower on the 60-minute time frame. And we're looking at the spiders here pre-market. And so yesterday ended with a little baby topping tail above the 200 MA. And so, the ability to get above that moving average is a reference point. It had room to move up. And that, honestly, that topping tail really wasn't that much of a concern since it's in an uptrend and had room. But now with this retail sales number that I guess caught the market a little off, surprised there. We've got this nasty down bar, wide range bar breaking down through this support right here, which is pretty much, I guess, yesterday's low area, and 250-ish. Yeah. And which the next day, 272.47-ish. I guess, okay, down here. So now we've broken that level. This is really little to nothing, which opens up the door to moving down here. And that still wouldn't violate this upward trend on the daily time frame, but the next step is to see if we get a close below this level, and our internals, which set up last week with a sell signal, the agreement between sentiment and breadth, that in alignment with this pattern would suggest more downside. But ultimately, to violate this trend here, you've got to break through major support, and that's still quite a ways off. And with Mr. Schizo market that we have here, who knows, it doesn't go back up again. Anyway, we've got a crack in the wall, so to speak. Our internals, which came into alignment at the end of last week, right here, where breadth sentiment pushed up above those bands there, and this was already up above at an extreme, but that in of itself doesn't signal to us to do anything. Sentiment has to be in agreement and vice versa. Then we have a signal, which we've got. And as I wrote in Monday's letter, that could lead an actual turn by at least days, if not up to a couple of weeks. So we're pretty much in the area where the turn should happen. Technically, our internals are lined up there as well. So now we'll see how far this goes today, whether buyers want to step up, and they're beginning to a little bit here. I'll just show you on the 5-minute, a little bit more of a X-ray view of this drop right there. So when we define trends, and this is the way we do it, I've done it this way for many, many years, and it's black and white. It's one of the few things in technical analysis that really doesn't have a gray area. No trend lines, no channels, no Bollinger Bands or whatever. It's so simple. Define a pivot. What's a pivot? A bar with 3 higher lows to the left and right. Once it makes a higher high, you mark that off as major support. If it violates that, it's no longer in an uptrend. It'll break trend lines. It has to. So no need to draw them. They're meaningless anyway. In any event, it breaks major support. It's no longer meets the definition of an uptrend within this time frame. You see where it is on the daily time frame. It's way down here. So from an intraday trading point of view, with this 60 breaking from lower with an M top, that tells us that we can short intraday rallies if you use the 5-minute or whatever you want to use. No right or wrong to it. But in any event, breakdown, break of trend, you can short rallies, see where it goes intraday. You're still trading against this upward move on the daily time frame. However, this is possibly now what will be the transition. So at the end of the week, we will see whether this green bar, if this selling continues, turns into a topping tail bar. And that would not break the prior week's low. So this is what we call the factory work. And within multiple time frame analysis right now is to say, what I just explained to you on a 5-minute trend. Right? Well, this is in a downtrend to sideways trend because of the depth of retracement. It's in or into what we call a sideways trend because of the depth of retracement. In any event, it's where it should make a lower high. So lower highs here. We're going to see if this turns into a topping tail. And then next week, because I don't believe that this would have the ability, I don't think, right? You got to be careful about thinking as a trader and a technical investor. Just go back to the charts and see what are they saying in the moment. But in any event, I don't think this could break last week's low and close below it this week. We shall see. At this point, based on this break here, we'll see if this can actually turn into a topping tail bar. And then whether it's a red topping tail bar closing below its opening price or a green one closing above. Step-by-step factory work. All right. So that's our spiders. We look at the Qs, see what they're saying. And this just marginally took out this high. Got the same M top here. And a little bit, we always like to do a little education in these morning pre-market things. So what does that mean as marginally? Well, you know how much I despise the use of indicators. This move up had good momentum or speed, however you want to call it. Now, this little minor pullback, and now we've got a reversal after just marginally taking out that high. So the indicator aficionados will show you something like this, all right? And let's assume this goes down and this M top formation actually follows through. They'll say, oh, look at the bearish divergence that occurred at that time, and that foretold of this happening. You don't need any of this. Just as I explained to you, is it an uptrend? Does it marginally take out the high? Momentum stalled. Has it changed the trend? No. It could go sideways, but if it takes out that low, major support, it's no longer in an uptrend. This foretells of a warning. Our market internals tell us we've got a 200 MA there. We've got price resistance right there. So a whole bunch of information suggesting that we should see a bigger pullback. And as you can see, it's happening here on the 60-minute time frame. And deteriorations of a trend in a higher time frame begin in a lower time frame. And then we see how it evolves from starting here, evolves into here. We see the reversal on the weekly time frame that turns into a topping tail or a red bar. Then it breaks the low. Does it close below a prior bar's low? And then where does it go from there? Step-by-step systematic process of trend analysis as to what's happening in multiple time frames in whatever you're going to trade without putting any squiggly indicator lines on the chart or connecting dots along the way. Russell, a little stronger, but into resistance. Same break right here. So looks like I'm going to continue to move down. We've got a clear line in the sand above and one below. And we'll see in the next few minutes how it all plays out. Transports playing catch up at the 200 MA here. In the area of price resistance, makes sense for it to stall. And well, they don't trade too actively, this ETF, especially pre-market. So, but you can see where the dot is right there. So it's below there, 187.99 below there. So gapping below this little narrow bodied bar, bearish, suggests it's going to go lower. And so one of the things in the gap list and what we covered in MT Live yesterday when we talked about gaps was, is it gapping below a green bar? Is it gapping below a big green bar? So how bearish is it? And so we can define that step by step. Right? Dow breaking below, M top in place, little to no support here. Now, the extent of this move in a short period of time, let's go here. You see buyers are beginning to step up here a little bit. Why? After this break? Because that's how the market operates. It's reached some intraday support here, and there's going to be some buying. Now, what we'll be looking for in the first 5 to 20 minutes or what have you is, can this bounce or does it go sideways into the 10 o'clock reversal period? And if it doesn't bounce and go sideways, that opens up the door to selling a breakdown. And at that point, you say, well, what about this? Well, if it can't bounce from here, right, we go through the step-by-step weight of the evidence types of analysis, meaning if it can't bounce here from here in a half hour, what is the likelihood of this holding? Ultimately, we can't say with 100% certainty, but the weight of the evidence probabilities would suggest, based on this pattern and what I explained and this void below, that it goes lower. So we'll see. Can it bounce back up here? Does it begin to form a trading range? Or does it go sideways, break? Does it form some type of a shock pattern? And I say, well, what's a shock pattern? Well, what if it goes sideways, breaks up, and immediately breaks right back down again? Well, now it's created a resistance area, and that shock, look out below. Okay, let's move this out of the way. We'll take a look at the futures, and then let Dan, we'll cover open positions. And so we see the beginnings of the stall, the little topping tail, the break that's occurred here. We want to see the intradays. Right? There's the futures, which obviously trade much more actively, so we get a clearer picture pre-market, but it's got a little extended and trying to stabilize. And same thing, Qs, well, these are the futures. Here's the break, 200 MA, marginal, new high. And we'll see if it closes below that low here, how far this bar can get down into this wide range bar. And so that's one part of our analysis of being objective, to say, here's a wide range green bar pushing up into this area. It took out the high yesterday. If this bar grows or lower well into here, that's going to suggest downside. So today is an important day to see how much this follows through or the lack thereof. Dow down 100 here, but you know, not really a big deal in comparison to yesterday, but that looks like a big deal. And I was looking at comparing to the price action, you know, that preceded it. So we shall see how far this goes. But we've got a crack there. Bonds up a little bit, actually, and getting bigger, which means yields are going down. And what we're keeping an eye on here as far as yields go are these yield curves, which are getting dangerously close to inversion. These are the shortest ones, and it's right above zero. So we're keeping an eye on that. You see bonds continuing to push up like this. These yield curves are going to invert. You can watch, if you don't have the futures, you can watch TLT. Right? You can see the spike up there in the ETF, which is pushing higher there, and TBT, which is the yield ETF, and you can see how it's inverse. It has to go down. Oil correcting here a bit, kind of sideways. We'll see if it holds this low or whether this is a bullish sideways correction right now. You know, we're not sure, but this morning it's not getting any love after yesterday. Let's push up. And gold, pretty much still doing this bullish, downward sloping corrective price action. And you know, I mentioned the last couple of days, keeping an eye on the dollar, which is down a little bit, hard to see here just because it's this ETF, but the euro, which has been getting smashed, it's up a little bit here this morning. So we may not see much happen in gold here, but if this euro keeps dropping, I think, well, historically, gold is going, this little bullish consolidation is not going to work out. And we'll see which way that all goes. All righty, Dan, it's all yours.
All right, thanks. Good morning.
Fine yesterday, John. You know, they were doing you're probably going to hear some more noise going on here, but they had to turn the power off here. So I moved out to the boat where I had a generator and was able to bring my computer out there and work from there yesterday. Didn't have all my tools, but, you know, was able to do something. So for those of you on YouTube, that's why we didn't connect yesterday, but we're back.
We're back. Schwarzenegger. Yeah, so I was listening to Greg's review there, and it's almost exactly what I was saying into the close yesterday with the crack and the markets and the cues here. And I said, ideally, I would like us to gap up a little bit, down a little bit, not rally, 30-minute low, and some type of potent reversal bar. And I'm stalking the cues here. Just because they're the weaker of the four. We went through that in detail, and Greg just did also. Opens, tandem, been in this for a covered call for a long time. Tomorrow we will, well, we actually already did roll it out to next week when it rallied on Tuesday. So that one is fine. We tighten stop. X, we have a covered call. Urban covered put. Costco covered put, no, I'm sorry, a bear call credit spread. Quartia in the retail sector. We're short stock with a stop over the highs. Sierra Charlie, we're still in, covered call. Disney, covered put, that's fine. XOP rallied against us, but we legged into a covered put. On this gap day, gap reversal. GHL, we shorted stock into the close. ALK, we have a half of a put spread left, the 65s. And that's it. I see no problems. BLMN up a buck, 2040. It trades very sloppy, but it's a bullish gap. 30-minute high if you like, but I don't like the way it trades. NTAP getting whacked, 61, way the heck down here. Sell setup at the converging 20 and 50 on the weekly. Just got to watch it. AMD, well, trader, this was a put spread candidate for the weekly, and I just canceled it because we didn't get anywhere near our desired credit. What position do you have? And I'll be happy to give you my thoughts. We were in a covered call. All right, well, let me come back to that. I don't have it in my open positions, but AMD. These three bars are red. This was a little bit of a gap failure, and the market is getting weak. I'd tighten the stop, maybe 30-minute lows. The low of this bar is 22.66, so I'd say 30-minute low. I would bail. Hubs. Let's see, 164. That's a very bearish gap, but there's support right here. We'll have to come back to it. 6, I deleted. 55, very bearish gap, but we get it's excessive, so we have to wait and see what happens. Hey, Ladon. Yeah, it was because of the retail sales were very disappointing. This looks like a little penny stock toy or whatever, but 227. It's a very bull. You know what? I'm going to watch this thing. That could set up. RBZ. I have no idea what it is, but it's getting, that's a lot of volume. I mean, look at today's, look, no volume here. This is a 5-minute chart. Let me change it to 15. Look at all these dots. That's a sign of no volume. But this is, I'd be curious what the news is to get it moving. Billy Boy, 1890. A bullish gap, but I'm not sure what the target is. Maybe 2021. That's worth a watch. I'll put them here. Cyber 100, very bullish gap, but excessive. I mean, up $14 divided by 86. That's a big old gap.